If you want to become an intelligent investor, then you've landed just at the right channel. With this, let's start the video.
But now let's say if you want to go one more step and you want to take advantage of these corrections, then how can you do it? So let's look at 4 or 5 points around that. So one is deploy incremental exposure if you can. There is nothing like investing money in a correction. So I recently also made a tweet whereby I spoke about this, that the alpha that you will generate merely by putting money during a difficult market is much higher than any stock picking strategy, right? So just the ability, if you can, any amount, small amounts, and that is why SIPs work, right? If you ever thought about why SIPs work, and let's say you are with a PMS or an AIF or any of these guys, they don't have the advantage of an SIP, which means that during a difficult market, very few investors will put incremental money at, in the throes of a correction, right? But an SIP, what happens, automatically money keeps going during the bad times. And if you do if you break up the return profile of an SIP, then you will see that most of that alpha has come because you have invested every month during the difficult times, because you invested in the COVID months, because you invested in the in that correction period where the market went nowhere, because you kept accumulating the units during the bad periods. You make that alpha. That is why SIPs work. SIPs don't work because you're disciplined and you're regular. SIPs work because the markets are volatile and they automatically make you invest during times when most other investors don't. So incrementally deploying exposure is one of the ways you can go to the next step and take advantage of a correction. Intelligent switching, right? Even switching has to be done. If you feel that there is a business you always wanted to buy, but it was expensive and now it has corrected, and you feel there is an opportunity, then you can definitely switch, because you are not getting out of the market. You are switching from a business that is you feel is inferior into a business you feel is superior. Again, you're not going by the price action, but this correction is giving you an opportunity to get into a better business. And even this activity I've seen, and I've taken these hits and I've learned these lessons, that you have to do it once the volatility subsides, right? On the day of the bad news, or when the market is falling like a knife, if you do these switches, you will lose in that volatility. You have to allow the market to fall, and typically there will be a bounce back up and the market will stabilize. Of course, the entire fall will not be recovered, but let's say the market has fallen 100 points and then it recovers, let's say 60 points, right? And then it goes into a sideways movement. That is when you have to look at this intelligent switching. Third is, as far as your strategy is concerned, corrections are a very big learning opportunity. It's a live learning opportunity. No reading in the book can give you the clarity and the context that a live correction can give you. So this is a great period for anybody who has a strategy to build clarity around your strategy. Figure out, how is my strategy performing in this difficult phase? Tweak it at the edges. Try to improve the returns. Stick to your strategy, but try to filter it, try to refine it, try to tweak it at the edges, so that when the next correction comes, you are in a much better position. You will, of course, lose money. There is no strategy that will work the best in a bear market and a bull market both. So you will have to have a compromise. So if you have a strategy for bull markets, then in a bear market, you have to see what best can you do around the edges to mitigate your drawdowns, or try to do something within the same strategy which can improve your overall experience in that period, right? You will still lose money, you will still have a drawdown, maybe you can reduce the drawdown a bit. So those are the things that you have to think about and reflect and implement during these corrective phases. And finally, about the performance, you have to develop the mindset that you will not bother about making money every year. If you study any investor, the best of the investors, whether in India or abroad, everybody goes through the same drawdowns that we go through. Everybody goes through multiple years where they make no returns. You've listened to so many interviews on YouTube, you've read so many books. Just reflect on this point. Everybody goes through, when the market environment is not good, nobody can make money no matter who is, right? So the difference is the mindset. The mindset that I am playing a cycle. I am playing the long-term game. I am playing. So this is the year for me to invest. This is not a year for me to harvest. This is the year for me to do the things which will give me the result 2 3 years down the line. So that kind of a mindset is required. Every quarter, every month, every year, if you sit and analyze how much have I made, I would have been better off in gold, I would have been better off in FD. It's not going to cut it. And finally, priority. If you can, right? If you are that next level investor, then like I said earlier, right? the best performers out of a correction are always small caps, right? If you are deploying that incremental money, then it's a risky thing to do. So maybe you have to spread it out, but getting some small and mid cap exposure in corrections, gives you outsized returns, because small and mid caps are beaten down extra in a correction. The large cap has fallen 10%, these would have fallen 20-25%. So there is the pendulum swings more to the extreme for these guys. So if you are deploying that extra money, and if you feel that you have that risk appetite, right, and you want to go to the next level, then you have to allocate a significant part of that incremental money to small and mid caps, because when the market turns, you will make the maximum money there. And actually the risk is lowest at this point, in these small and mid caps relative to the return, right? Relative to the return, the risk is the lowest. So that is what I would say.
So if you loved this video and you had a differentiated business insight, then do subscribe to this channel, and you can also follow our main channel of SOIC. Thank you so much for watching it.